What's up guys, Rodrigo here, welcome back to one more video. Right now the Bitcoin price is trading at 25,900, which is the price that we closed the candle yesterday, the weekly candle. And yes guys, you know already, we closed below the level of the 200 moving average. This is a very bad sign for the Bitcoin price because this level is usually a very strong level of support and resistance. But we are not done yet guys. Yes, we closed below it, but we still can see some reaction this week. This week is going to be crazy with insane volatility because we have very important upcoming news events. Tomorrow is going to be released the estimated CPI, and the day after tomorrow we are going to have the decision of the Fed on the interest rates. Approximately 80% of the experts are expecting that the interest rates are not going to be raised again, which would be very bullish for the price of the Bitcoin. And if this expectation really becomes a reality, we could easily see massive volatility here to the upside, breaking back above the level of the 200 moving average. So because everything that I just said, this movement here below, this closure below the level of the 200 moving average could be just a fake out, and we are indeed going to go higher. And because of this, today I'm going to bring to you some bullish chart that corroborates with the scenario of this fake out, of this trap right here. So yes guys, without further ado, let's go to the Bitcoin chart here, and in the weekly time frame we can see the formation of this inverse head and shoulders. This is the first bullish pattern that I have to show you today, and it goes like this, and the neckline right here, right? You can visualize it, so I will delete it. So the important level for this pattern right here is exactly that level that we are right now retesting. You know how this pattern works. We break the neckline, retest it, and finally go to hit our target, exactly as just happened for ADA, for example. You can remember, right? So if we watch this movement, we understand that this correction here until this point is completely natural, and that the important thing here is to hold this level of previous resistance as a new support. But pay attention, this is the weekly chart, so this level is not just one line like this, but it is actually a zone of resistance. The target for this pattern here, from the bottom of the head to the neckline, and from the moment of the breakout, let's see, the target would be at 40k if it plays out. Next chart we are going to talk about is the cup and handle. It is a very similar chart. We also have, let's say, a neckline, and for this pattern it would be here. We have a cup here, like we are having, and a handle on this manner. And our neckline is the level of this zone of resistance right here. This one is a slightly bigger pattern with a bigger target as well. So the target for this one, if and only if we break this to the upside, would be all the way up to the level of $60,000, $62,000. The third one is a bull flag. I think you are familiar with the bull flag already. Let me show you on the daily time frame because we can see here better. So the bull flag, we have the pole like this, and then from here we start going downwards, forming a parallel channel, which we call the flag, like this, respecting here as resistance and here as support. And once we break it to the upside, our target is the whole length of the pole, like this, depending on where we break out, of course, which would bring us again to the 39k. And finally, the last one, I want to show you the ribbons. Just let me delete this real quick, and let me pull the ribbons right here. Here they are. The last time we talked about this indicator on this channel, I think, if I'm not mistaken, I told you about this moment right here of this inverted hammer, if I'm not mistaken. And I told you guys, this is a very bad news because we tried to break above the level of the ribbons, but we failed and we closed below. And I said that the probability for us to have a massive leg down was very high. And exactly on the next day, we had a dump of 6.5%. So if the daily is that important, imagine the weekly. And it is exactly about this one that we are going to talk about on this video. You can see here that some weeks ago we had this huge pumpy action right here, and by doing so we broke above the level of the weekly ribbon, because before that, prior to this, we were trading below this level, as you can see. And with this massive pump right here, we broke above this, and now with this corrective movement right here, that can be our bull flag, we are just retesting the level of these ribbons. It is a very powerful support and resistance. At this time, of course, it is acting as a support for us. This is a massive level of support that we don't want to mess with and we don't want to lose. In order not to lose it, we of course need to get supported by it and go higher. Going higher from this point, we are breaking back above the level of the 200 moving average. This whole zone here is very important because we are having confluence of three different things. At this point right here, we have the 200 moving average, we have the weekly ribbon, and we have the neckline of the head and shoulders. So this, together with the probable bullish news that are coming this week, indicates that this closure below the level of the 200 EMA can be just a fake out or a trap. And that's it for today, guys. Thank you very much for being here with me until the end. If you like this content, don't forget to smash the like button. If you're not a subscriber, subscribe, hit the bell, and I see you in the next time. Stay focused.